let's get into the intro of why we're all here, and let's figure out like where we are in this market cycle, and for cryptocurrencies, because cryptocurrencies typically follow the Bitcoin. If you haven't, you haven't been living under a rock for too long, you would have heard of Bitcoin by now. And Bitcoin is the promised cryptocurrency that is the medium of exchange that is there, that is the promised medium of exchange, the decentralized version of money. But it hasn't really served its purpose very well because it's actually ended up being a store of value, because there is a maximum supply of 21 million Bitcoin in existence. So everybody has been using this token or this coin really as and it's just been gathering up all this momentum and wealth in terms of people buying it up and storing it and really holding their Bitcoin instead of actually trading with it. So it hasn't actually been the decentralized currency that it has been promised. And so it's actually failed in terms of the actual vision of the secret founder, Satoshi Nakamoto, as it being a new currency that we can use to actually trade and to be able to exchange goods with. So that's kind of that's really the big player in this crypto space, Bitcoin. It's still it still has a lot of future left in it, if you want to ask me. But it also just hasn't really done what it's supposed to do. It's really expensive in terms of using it as a transfer. Like, to send one Bitcoin from me to you might cost us like a $20 fee, for example, and that's really typically like what the kind of costs associated with using the Bitcoin network. And it's actually quite slow as well. It would take us about 40 minutes to actually receive, or it might take you 40 minutes to receive Bitcoin if I were to send you Bitcoin. So it's actually a really slow technology and it's quite outdated. So on the back of that, there are now all these other coins. There's 9,000 plus different coins, different tokens on the market available for you to purchase and buy. And that's really created a bit of a wild west out there in terms of cryptocurrencies, because there is no sort of regulations, and because there's a whole bunch of different coins doing a whole bunch of different things that let's just say don't really have a utility case and don't really have much else backing it besides a lot of hype and pictures of dogs and stuff like that. So you may have seen some dog coins out there, some Doge coins, and they're all what we call the meme coins. So that's kind of like an insight, a little introduction into the ecosystem of different coins. We've got, real old technology, which is sort of Bitcoin, which is a proof of work, which is where there's still mining occurring, where we need to have a computer solving a mathematical puzzle to prove that, to basically record on the, say, quote unquote, decentralized ledger or the blockchain, the transactions between people. And that's really where this whole mining thing comes in. And that's really sort of the back end of seeing computers work out these math problems, fighting to solve these math problems. And the first computer to solve the math problem actually earns some Bitcoin in return. And so that's a proof of work kind of token or kind of coin. There's other coins out there that are proof of work moving into proof of stake. One you may have heard of, which is called Ethereum, which is number two coin. And that coin then it's promising different utility. It's actually like what we would call sort of fuel for the internet, or fuel for the cryptocurrency world, where Bitcoin's like a store of value. It stores a lot of value, hence why the price is $38,000 per Bitcoin right now. and Ethereum is $2,500 per Ethereum, roughly. And it's really allows you to do a whole bunch of different things. It's really allows you to build different decentralized applications or dApps. It allows you to utilize what's called now is decentralized finance. So you can start to lend out your Ethereum, you can lend it out and you can earn interest and really make a passive income. So that's a wonderful world where finance isn't being governed and ruled by the big banks. It's actually now decentralized. It's built into smart contracts, and that's an amazing world that we're, that's only just beginning to come to the surface. Smart contracts, decentralized finance, where there's no, it's kind of like a trustless system because it's all built within the blockchain. It's all coded within the technology. So we don't necessarily need to have trust. We don't need to like connect with banks because that's a centralized thing. So it's decentralization, and it's built into the blockchain, as in that's the law of how things work, and that really opens up the potential. And this blockchain technology and being able to write code into blockchain to create new tokens that offer new solutions or that offer new possibilities to earn interest, for example. And that really opens the door to the future in terms of different types of currencies that are available to us and what we can do and how we can engage with, with this new world of finance, really. And really, it also allows us to reprogram within us how our relationship to money, because money is changing very rapidly. Like, in a massive way, money is transforming from fiat money, from paper money, which is being printed, like 2020, there's been a massive printing of paper money, and it's really creating a lot of inflation. So we're transforming from this old version of paper money, and we're not even backed by a gold standard. So we're just backed by paper, which is kind of, as real as cryptocurrency is real, but at least cryptocurrency is on the blockchain, it's decentralized, and it offers a little bit more a little bit more technology behind, what money is today, or what money can be, and also allows us to, I guess going back to the original promise of what Bitcoin was, it's about decentralizing money away from the banks, because they're the essential authorities for money, or they have been. They've been trying to essentially earn compounding interest off the money. So they've been earning compounding interest off money, and we've been the ones paying the compounding interest. We've been the ones paying the interest, and we still are in various ways on that money. And that's really the thing that's really been, as a humanity, as a species, that's really one of the biggest cancers of the planet, is us paying banks, big banks, compounding interest on money that they make up out of thin air. And that goes back to, I guess, Rockefellers and different foundations that have maintained control over this sort of this financial, or this energy of the world. And so that's like a little bit of a history about money. We're moving into a new vision for that and a new expression of money. And now we have an opportunity to actually participate in the early stages of that. We are still in the early stages. We're still in the early adopter stages of cryptocurrency, because what I'm going to do is I'm going to share my screen, and then we're going to go into taking a look at what does it look like if we're talking about cryptocurrencies. So we're going to look at the markets, like tracking the Bitcoin chart, for example. We're going to look at the market cycles of Bitcoin. So every 4 years, there's what's called the halving, where there's actually a halving of the amount of Bitcoin that's available on the market. I don't know if I'm explaining that super well, but essentially what that means is that pushes an increase in price into the market, into the value of Bitcoin. And that's why we have these hypey sort of bubbles that we're currently in the middle of, say a Bitcoin bubble right now, where the price is boosting up, and everyone, that's why you would see, like, on the media and on the news and on social media, on different places all around the internet, like, hype around Bitcoin, and probably some hype around other coins. And because there's 9,000 other coins, it can get pretty confusing pretty quickly about, well, what is Bitcoin? Why is all these other coins? And what's a dog coin? So there's like, and then it hypes and hypes. And if you don't really take the time to zoom in, if you don't take the time to do some research to figure out what this ecosystem's all about, you can actually sort of miss that whole bubble, and then it can pop, which is what happened to me, I suppose, back in 2018. I was like, all right, quickly, I'm getting on board. I'm checking out Bitcoin and cryptocurrency, and I bought some Bitcoin, and I bought it at the peak of the market. And let's pull up the chart. I bought it at the peak of the market, and then the bubble popped, and then there was a whole bunch of like price reduction. My Bitcoin that I bought started to go down in value. I was getting scared, and then that's when the market, because this market is so new, and because this market is very raw still, it's basically designed to take the most amount of money from the most amount of people most of the time. And and especially as newbie beginners, that's what it does. And essentially I was shaken, during 2018, during when I bought it at the top. I was shaken to the point where I didn't want to look at it anymore. I was like, no, I can't look at this anymore. I'm not going to look at it. And luckily for me, I didn't sell my Bitcoin. I just held on to it, left it in my quote unquote wallet, and I let it sit there until the next market cycle, which is the one we're in now. And by the time I looked at it again, which was about 3 years later or something, my Bitcoin had still tripled in value. It's still 3x'd. How much, even though I bought it at the top, I bought it at like $20,000 at the time. And then my $400 investment, turned into actually $1,600. So, which is now what I've used to then sell that Bitcoin and buy other different altcoins. Because as we look at these different market cycles, and let's go here, share the screen. As we look at the Bitcoin chart, we will see that there's different market cycles, obviously. And I'll just have a look. So even just getting involved buying at the top and holding is a good investment because of the early stage that we're at in cryptocurrency. All right, so where are we at here? So let's pull up this chart here. So this is a chart that I'm looking at right now. I'm looking at this thing called tradingview.com. This is a way that I keep track, and this is a really really good free service, free app that you can use. Hello? Yeah. If you're gonna just your mic, it's a really good service to use to track the chart of trading. So let's have a look at what this chart means right now, just as it sits from this point here. So right now, if we look here, we're looking at the 1 hourly chart. So and then this chart is made up of different candles. And this is the current price of Bitcoin as we're speaking. And each one of these candles, this red candle here, represents 1 hour. And that 1 hour is, here's the clock. It's ticking down. There's 26 minutes left for this 1 hourly candle. And we can see the price ranging between, between the last day, essentially, or last couple of days, really, in all these different hours. So a green candle means that it began at the bottom and rose in value and ended. And maybe I can zoom in here and show you a little bit more about that, give you a little bit more of a deep dive into the fundamentals of charting, really. A red candle here is, let me get this pencil out. Red candle is where we start at the high and then we lose value and we end here. So this is typically what's called the body of the candle. And this is what's called the wick. So the price ranged down within the last hour, or within this particular hour, all the way to down to this point here, which is $35,903. And then it actually bounced back up to $36,357 exactly. And then the candle ended and a new candle began. And then we ranged again down to here, closed a bit above that. We built green candles. And that's kind of like how we're tracking the price of Bitcoin. This is TradingView, so you can actually go and plug into TradingView a whole bunch of different types of cryptocurrencies that you want to track. You can plug in different assets like stocks as well. So this is a stock market charting type tool. Allows us to keep track of charts and really find places to buy into the market if that's what we want to do. Again, I mean, I haven't said it yet, but this isn't technically financial advice. I'm not a financial advisor, but I'm just going to go and zoom out. We're going to zoom out right now to the, say, the weekly chart. And I just want to give you a bigger picture of what we're looking at here when it comes to Bitcoin. So we're going to zoom out here, and every candle now represents 1 week. And now we can get a bigger picture of how the price of Bitcoin has been moving through time. And we're going to go back. This is 2018 here, and that's the last market cycle of 2018 where we ran up and then we crashed back down, and then we found a bottom here essentially, and this is like the bear market, what they call the bear market, from this point, January 2018, to the beginning of the bull market, which was, I guess just after COVID hit. That's when things started to move again. That point there, March, April was the low for 2020. And then now we've just begun the next bull market, which is this upward trend here. So if we zoom out again a bit further, we'll see the last, there'll be another, and you can't really, you have to zoom in a lot more here to see the price. Oh. All right. I have to kind of zoom in because the price was a lot lower, in 2012 when Bitcoin was just beginning. So this is kind of like checking the chart. It went from, $130, $112 up to $1,200, say, for example. And that was really the bull run of that market cycle. 2012, 2013. Now we've got this market cycle here from 2017 to 2018. It lasted about a year, the run up all the way up to these prices. And that's when I was telling you the story about when I bought in at the top here. And I felt like it was a real bad move at the time, but obviously that's the fear and greed index, or the fear and greed emotions of this whole market cycle, by buying in at the top and then watching the price dip down. All you really needed to do was apply the leverage of time to then be able to realize some gains, essentially, because as the market cycle, whoops, stop drawing on this thing. And then now we've moved into this next market cycle. So whether to answer the question of whether or not you're too late in the Bitcoin market cycle, some people believe that we are not too late. I don't believe you're too late, because we are typically only, say, halfway between this market cycle. There's still a lot more room to grow in terms of what this store of value Bitcoin can actually offer us. And I best go in here and actually share with you my I'm not sure how to do this. Oh yeah, here we go. I'm going to share with you my personal. Oh, how do I do this? Just to put it into the chat so we can continue this conversation afterwards. So you can copy that down. Meetings. Let's go. Jesus. I think I've never done this before on the live call. All right. How does this work? Schedule a new meeting. All right, this is one. We'll just schedule this for after the call so that we can all jump on this if we want to. After this call, let's say it's going to begin at, I don't know, what are we doing here? 11 p.m. my time. Yeah, it's pretty late. Yeah. And just leave no passcode there. Give me the options to save this. Anyway, I'm going to try and get this and share this this link with you so that we can connect in the middle of this while we're doing it. So I'll figure out how I'm doing that right now. But so that gives you a little bit of an understanding. If we want to zoom a little bit in now, in terms of now we're in this space, we've just had this major correction. I don't know if you've heard on the news, but Bitcoin and the rest of the cryptocurrency ecosystem just had a major dip. Like, it's actually reduced in price by 50% in the last 2 weeks. We had this major downturn. If we look at these weekly candles here, we've had 2 big red weekly candles and a whole bunch of price manipulation throughout this whole process. And we've experienced a price reduction from a high of 60,000 US per Bitcoin down to, what are we at now? $36,339 per Bitcoin. And that price reduction's happened across the market. It's shaken a lot of people out of the market. And again, designed, this marketplace is designed by, it's what's more so been taken control of by institutions and institutional investors and bigger players, what we call whales, and they really know how to try to shake out more money out of the retail investors. We would call ourselves retail investors, technically. And if we're not aware, like if we don't go through the initiatory process of investing and weathering the storms of these different kinds of crashes, we might get shaken out of the market. And that's what this is designed to do, really. It's designed to get you to buy up here. So say, for example, if you bought some Bitcoin up here in the $60,000 or $55,000 range, and now it's gone back down to half that value, it's a pretty potentially scary sight to see, and you might get a lot of those feelings of fear that will cause you to try and exit the market, and sell. And if you sell now and you're in a loss, that means you're losing money. That's the wrong thing to do, and that's really the only way you can, quote unquote, lose money right now historically in Bitcoin specifically. Now, along with this Bitcoin pump, I guess, comes all these different alternative coins that we have. And you can see here, this is my watch list of a bunch of different alternative coins I've been watching. And it shows you sort of the percentage gains for the last day on all these different alternative currencies. So this is -6% for Link, EOS -6%, Aave -2%. So a lot of these, like, they're fluctuating constantly, day to day. And that's really what this marketplace is all about. We're here because of the volatility, because there's massive volatile movements that we can make gains on that isn't the stock market, because the stock market doesn't range this much. Isn't that exciting? Even though the stock market is due for a massive correction, just like what Bitcoin and what the whole crypto market has just been through. So it's interesting times to be alive, really, because we're sort of seeing a clashing of these two different worlds. But anyway, that's kind of like a more advanced thing for the follow-up call from this thing. So just going through my tick sheet here, talking about market cycles. Talked about the time in the market. So I just got this memo here. We got 10 minutes left, which gives me my clue to send you guys a link in the chat for the next call, so we can continue down this rabbit hole a little bit deeper. But I really want to give you the big picture vision, because we've got money. Excuse me. We've got Bitcoin that hasn't really fulfilled on its promise to be a new transactional currency for us to be able to transact. Like, we didn't use Bitcoin to get on this call, and no one would ever send their Bitcoin to buy some goods and services, because Bitcoin is, like, far more valuable than the dollar is right now to actually transact. Funny story. I actually bought some things using Bitcoin back in 2018. Actually, I think it was in the bear market in 2019. I bought like $100 worth of some random product online, and it turns out like that $100 today is probably worth like more like $400 or $500 worth of that product. So it was a really expensive product I bought, considering the price of Bitcoin. So after this, we want to cover some costly mistakes that I've learned along the way, how to protect ourselves from phishing attacks, because if we're going to be diving into this cryptocurrency world, there's a lot of predators out there, there's a lot of hackers, there's a lot of people trying to utilize the sort of Wild West nature of this marketplace at the moment to then get access to our computers, to get access to the information that we're transacting, to then to take control over our assets, our crypto assets. So there's potential of fake websites popping up. One example is I experienced this jumping onto an exchange here. I was actually going onto KuCoin the other day, which is an exchange that I use, KuCoin. And this brings us into where to buy cryptocurrencies. Where do we go to, get our US dollars and our Australian dollars and put it into market? So there's a whole bunch of different exchanges. Some are bigger, more reputable than others. KuCoin is one that I use, where you can buy crypto directly through the exchange. Another one is called Binance, and that's really one of the biggest ones you can use. they're kind of like the world's leaders in exchanges and becoming crypto exchanges where you can use your fiat money to buy crypto directly. So you do a bank deposit, you can buy with your credit card, which makes it pretty easy. You pay a little bit more in fees, but it makes the whole process really quick and seamless. And then within, say, for example, this Binance platform, after you set up your account, you can actually then go and use your credit card or your Visa debit card to buy crypto, to buy Bitcoin directly. And that's becoming a really user-friendly way to do that. Now, what I want to say real quick here is when you go on to log on your account into Binance, you're going to be asked to verify your identification. So it is the Wild West, but they're going to actually, they're cleaning it up. There's regulations being put in place, anti-money laundering practices, I suppose. We actually verify your identity. You have to actually provide, copies of your driver's license. You have to provide, photo ID potentially. Maybe even you have to sign a bit of paper and hold it up and say, this is me with your photo ID. And it's like, it's kind of intrusive, but this is like a way, KYC verification, to check that who you are is who you are, and there's no one pretending to be someone else buying crypto. And so essentially what I'm saying is you can't really avoid tax in the cryptocurrency world anymore. You could have in the early days, but you can't anymore. And I don't recommend you even try, because they're clamping down on it. And that's the way of the future. So moving on to exchanges, there's a whole bunch of different exchanges you can use to buy cryptocurrencies. And all right, I'm gonna have to try and get the video sorted out. And then I want to just run you through. So for example, if we're on an exchange and we want to buy some cryptocurrency, where do we go to do that? So right now I'm actually logged in to Binance, and the place to go in these exchanges is actually the markets area on the Binance website. And the markets area will bring up a whole bunch of different types of coins and different types of coin pairings, because this is sort of financial instruments. These are different assets that we can use. We can use different coins to buy different coins. We can use different currencies to buy different currencies. If you have some Bitcoin in here and you want to buy different currencies, for example, you can simply search what you're looking for in terms of coin pairing. So you can search BTC to, say, USDT. We're going to spot market. We have to use the spot markets, BTC, and here you can buy. There's a whole bunch of different ones. Again, don't get confused. We just got to look for what you want. USDT, which is the US dollar stable coin. And then this is where the marketplace is for this particular coin or this particular coin pairing. And this is where you can go to buy and sell Bitcoin if you have US dollars on your exchange. And again, it brings up a chart. It brings up the order book of the current orders that are being placed and filled for this different pairing. And then if you are in the market to buy some Bitcoin, you can buy Bitcoin here, or you can click this button here and you can sell Bitcoin, and you can sell it into USDT. So you can sell your Bitcoin into USDT. As you can see, I have very little Bitcoin available, and I have no USDT available right now. So this is where you would go. You'd select a price that you think is a good price. You can click these tabs here and it'll change the price of where you want to buy your Bitcoin with. I'm going to spend, I'm going to buy some Bitcoin at 36,241. Again, you want to try and buy the dips. So you want to try and time it so that you're buying in the red and you're selling in the green. That's really the way to do this. And then you would go here and you'd add the amount that you have available that you want to buy in terms of how much you want to buy. You can go 100% of what you have available, and that would equal the total amount, and then you can buy Bitcoin. And that's kind of the transaction on buying and selling Bitcoin. Buy, sell. All right.